Welcome to this session on helping you identify cash and bank fraud schemes in your organization. I hope you will find this information both informative and of value to you in helping you manage the risks within your organization. Hello, my name is Craig Greene, and I'm a founder and current managing partner of Greene Forensic Accounting Solutions, LLP. GFAS specializes in providing forensic accounting services to law firms, business enterprises, governmental units and agencies, not-for-profit organizations, and individuals. I've been a practicing forensic accountant for over 30 years. I hold an undergraduate degree in accounting and have obtained a Master of Science degree in criminal justice. Over the years, I've had the pleasure of being an instructor in fraud examination and forensic accounting for the Association of Certified Fraud Examiners, Institute of Internal Auditors, other professional organizations, as well as colleges and universities. I am assembling a wide range of instructional presentations to be uploaded here on my YouTube channel and my firm's website to help you, the owner-manager, identify potential fraud and embezzlement within your organization. In this second session of these presentations, I want to focus on the various schemes the fraudster uses to embezzle cash and funds from the organization and its bank accounts. It is my hope that armed with this knowledge, you can reduce the fraud risk of your own organization. We will then turn our attention to one of the most important parts of the presentation. We will discuss a list of red flags, warning signs, to look for within your organization. I will then end the presentation with a discussion of one of my real-life cases. Let's start the discussion with one of the most common and often used frauds, skimming of cash. Cash skimming is simply the taking of cash by the fraudster before there is any entry or recording of its receipt in the accounting records. Skimming of cash is often used by unscrupulous business owners to avoid paying taxes on all of their income. The scheme is considered an off-book fraud as there is no evidence of the event in the accounting records. That being said, there are some telltale signs that you may be able to identify in other accounts that we will discuss. Methods of skimming sales include unrecorded sales. The fraudster never records the sale in the accounts, cash register, point of sale system, etc. For example, not including a cash register or a point of sales machine is part of the accounting system. Cash register manipulation. One method is the fraudster fills out a daily sales register report, and no one compares that report to the amounts that are actually shown on the cash register tape. Another method is to advance the cash register tape forward and run totals before the end of the business day, thus skimming the remaining day's receipts. Fraudster may also keep the business open during non-business hours and not report any of those sales. There might be also skimming of off-site sales. These are from salespeople that go to customers and perhaps require cash payment that is more than the actual amounts should be. Understated sales. The fraudster may use a co-conspirator and the cashier does not ring up all the items purchased, or as discussed earlier, there's a lack of controls that allow the fraudster to manipulate the shift sales and cash sheets. False discounts. They might be applying discounts to a co-conspirator or recording the same in the accounting records to cover up the fraud. This is a listing of the red flags, warning signs that you need to look for within your organization if skimming is occurring. The most common red flag is that your organization's gross margin and profitability has eroded or gone down over time. If the skim sales are related to goods, then the organization will be experiencing inventory shortages. There may be a change in the composition of daily deposits over time. That is, you'll see less cash actually in the deposit and more checks and credit card charges, and that is certainly a red flag. Finally, fraudsters often destroy evidence of their crimes, so missing cash register or POS reports and/or tapes is a big red flag as well to look for. Years ago, I had a case involving a clerk that would steal checks received in the mail and place them into the daily deposit and then remove the same amount of cash. She would then delete the invoice in the company's accounting system that the check was paying. This would cause the AR detail not to agree with the general ledger. Unfortunately, the outside accountants would come in monthly and adjust the general ledger to the detail, never telling the owner and unwittingly assisting the fraudster in their scheme. Fraudsters that steal an organization's incoming check payments can often negotiate them by making a dual endorsement. The fraudster may also set up a bank account in the company's name or similar name to negotiate the stolen check. Finally, the fraudster may change or alter the name of the payee in order to negotiate them. What are some of the red flags to look for of other skimming schemes? Customer complaints. The customer complains that their payment is not being applied to their account or being applied long after the payment is made. Finding bank accounts that are not on the books of your organization. From time to time, you should have your banker look for all accounts listed in your organization's name. In order to balance a cash drawer, a fraudster may place their own check in the drawer or an older customer's check, such as a duplicate. Cashiers may embezzle cash from the registers and try and hide it through false customer refunds or voided transactions. Fraudsters may also use a deposit lapping scheme, that is, using a portion of the next day's deposit to cover the amount taken or embezzled. Or they might simply leave deposits that never made it into the bank as uncleared deposits in transit on a bank reconciliation report. Some of the red flags that we look for within your organization for cash larceny: large number of voids and discounts shown in the register or point of sales system records. Untimely deposits, unusual deposit timing to cover a deposit lapping scheme. Finally, a reconciliation with numerous deposits in transit or unusual dates that are shown. Some of the other less common schemes include stealing of the unattended checks and then simply accumulating checks under cash and then arrange a robbery with co-conspirators. Another scam that I'm seeing these days is through the use of debit cards or electronic funds transfers and wire transfers. Bookkeepers, accountants, and others with access to online banking may have the ability to make wire transfers without their manager's knowledge to their account or others through the internet. Most of us these days pay our credit card bills online. I have seen fraudsters pay their own bills using company funds by setting up the company bank account as the source of the payment against their personal credit cards. Many other organizations also accept electronic checks and payments, such as utility companies, taxing authorities, etc. Fraudsters may use company bank accounts as the funding source for their own personal payments of electronic checks as well. Finally, I've had a case where non-for-profit officers had access to a debit card and used it for personal expenditures, including a vacation. I also had a case involving a private company's bookkeeper who embezzled nearly $1 million to play casinos in Las Vegas with their employer's debit card. What do we look for in terms of the red flags of these types of schemes? Well, debit card charges for apparent personal expenses, electronic fund transfer payments for more credit cards than the organization actually has, unusual or unknown wire transfers to individuals or other corporations or companies that are not recognized, electronic fund transfer payments for apparent personal expenditures. There's an old school scheme called a forged maker scheme. It's where the fraudster steals a check and forges the signature. I've had several cases in the past where the fraudster used a rubber stamp signature to both sign the checks for fraudulent purposes as well as authorize wire transfers using the stamp on a faxed form. Altered payee schemes. Another old school method is to erase or use correction fluid to change the name of the payee. You also can add letters to the end of a name, such as adding the payee's name, such as ABCO, AB Company becomes AB Collingswood. And then finally, the user goes in and changes the name in the disbursement record to show some payee other than that is actually shown on the check. One of the more common schemes is check interception. It is not unusual that a fraudster requests the check and payment to a vendor to be actually returned to themselves. The fraudster then simply forges the endorsement and keeps the proceeds. What are some of the red flags you look for here? Missing canceled checks and other documents. It's one of the more common red flags. You simply want to have the fraudster destroy the evidence. Bank reconciliations are fairly straightforward and should not have a large number of unusual or unexplained items. When checks are intercepted, they often have to be endorsed to be negotiated. Look for handwritten endorsements and/or other unusual endorsements on the checks. Other red flags, look at the location of the bank, often shown in the back of the check, compared to where the payee's address is supposed to be. As I said previously, fraudsters often destroy evidence of their fraud, so look for bank statements with missing pages or copies of the cash checks missing as well. Finally, fraudsters often are lazy and will not have any normal supporting documentation in the accounting files for the support of the disbursements, such as invoices, statements, and/or check requests. If vendor checks are taken or intercepted, then typically they will complain about it. Be careful when complaints are routed to the potential fraudsters. Signatures that are poorly forged. And then finally, a segregation of duties issue, which is where one person with too many responsibilities, for example, a bookkeeper in a small business that does it all, pays the bills, reconciles the bank, and maintains all the accounting records. I always like to end these sessions with a real-life case that I worked on. This is the story of Karen, the accounts payable manager for a small publicly traded corporation. Karen had worked for the company for a little less than 1 year when she drew the attention of management. One Monday, Karen did not come into work, nor did she call in her absence, a bit suspicious given her position. The next day, the same thing happened. No Karen, no call. Management was concerned about Karen and tried to reach her to no avail. Concerned about her well-being, the next step was to call the local police department and request a well-being check. Several hours passed and the police called the company back as they had located Karen. Karen was sitting in jail in an adjoining state. You see, Karen's mother lived in that state and she had gone over to visit her. And while she was there, she was stopped for a taillight infraction that was out. Karen gave the police officer a fictitious driver's license that was issued by another state, which he immediately recognized as being suspicious. The reason that Karen used the fictitious driver's license was that she was wanted in the particular state she was arrested in for embezzling over $400,000 from her previous employer. Management retained us to determine if Karen in fact had embezzled from them as well. Despite having a clean opinion as their internal control system from an outside firm, unbeknownst to management, Karen had complete access to the accounts payable system. This allowed her to set up new vendors and write checks to them without any oversight from management. Thus, she had issued many checks to fictitious companies, manually endorsing them for her own use. Her embezzlement was a little over $100,000 before its discovery. So what were some of the red flags of Karen's scheme and what we should have seen by management? First of all, it was Karen's total access to the check writing system. No one was looking or reviewing the new vendors that she had set up into the system. There should be a vendor approval process. But sadly, the dead giveaway was when she was initially hired. Her employment application showing her work history did not agree with the dates and times that the background check performed on her had shown. Well, I hope you enjoyed this presentation and that it has enhanced your knowledge of potential risks within your organization. Please tell your colleagues about this video so they can learn as well, and subscribe to this channel for more programming. In closing, if what we discussed today appears to be occurring in your organization, you need to call me. I can be reached via email at cgreene@greeneforensicsas.com or at 312-692-1000 for those calling from the eastern United States and 702-430-1779 for those calling from the western U.S. Thank you for attending today, and do tell your colleagues about us.